Anyone who knows me knows that I have no problem telling someone they're wrong. We live in an era of fraud in America, not just in banking, but in government, education, religion, food, even baseball. I thought we were better than this. I really did. And the fact that we're not doesn't make me feel all right.
Back to the big long here, where a Chinese port partially closes due to employee catching COVID-19. So folks, put on your mask and get ready, because it is not going anywhere. There's three key points here. One, this is going to slow the global economy's recovery by adding new disruptions to the world trade. Second, the employee was asymptomatic and also fully vaccinated with China's homegrown vaccine known as Sinovac. And three, the Shanghai Metals Market website reported that 3 Maersk warehouses in the area have ceased operations due to this as well. This port is very crucial to the Chinese trade with Europe and Americas, and this is one of the world's busiest ports by container volume. A freight data provider, FreightWaves, quote in the Barron's article that it now costs nearly 10 times more to move a box from Asia to the US West Coast than it did before the pandemic. And also the Baltic Dry Index, a measure of shipping rates, that rose to an 11-year high this week. Now, this sounds like it's inflation to me, and this is getting out of hand. And this is crucial to Chinese trade with Europe and Americas. Freight costs from China to the US rose to a record of $20,000 per 40-foot box last month. That's a 500% increase on the cost in the same month of last year of 2020. And they're still battling one of their worst COVID outbreaks since it has emerged in 2019, which is insane. Because in the past 2 weeks, they recorded 878 COVID-19 cases, which doubled the total in July. So as this Delta variant becomes more contagious and new lockouts start arising, this will only enforce tougher restrictions when it comes to COVID-19. And when it comes to furniture shipping, you could just forget about it right now. You won't be seeing that for a while. Because Copel in a CNBC article said that they were paying about $1,500 a container to get from Asia to Los Angeles in the past. Now that price is up to $17,000, and if you want it rushed, you'll probably be looking at another $3,000 to $5,000 on top of that. At some point in the future, we'll come back to some normalcy, but it remains unknown on how long these supply chain disruptions will actually last. Analysts warns, especially Nick Morrow, as long as authorities maintain the zero COVID stance, these supply chain disruptions will persist in the near future. Dawn Tiara now says, given that the third largest container port in the world has shut down, we are already in a bad situation enough, and this just makes it worse, as prices will be passed on to the consumer, as some of us already know that has been happening since a few months ago. As the market stays hot, bidding wars are erupting over renters now. In July, rents nationally rose 7% year over year from a 1-bedroom apartment and 8.7% year over year for 2-bedroom apartments. Now renters applications, you're starting to see high credit scores, as well as people willing to pay more for a security deposit. That is outrageous. Let's just spend more money on a place that is going to cost us more money. Just rents going up everywhere. San Francisco saw a 79% increase. Seattle experienced a 55% jump, and Boston only saw a 5% gain, while rent applications rose 8% in Charlotte, North Carolina, and 9% in Portland, Oregon. Now, renters aren't the only ones facing rent increase, as the landlords like Matwani has had several tenants unable to pay and has lost about 30 grand in rent due to the eviction moratorium. Now, one thing about the eviction moratorium is that the Supreme Court actually struck down on the CDC's eviction moratorium ban, allowing certain landlords to actually evict the tenants. Now, because of the high demand for rentals, landlords are requiring jobs, and if you don't have a job, you won't get approved, and it's that simple. So we will have people doing what they've been doing since they've been unemployed, and then we're gonna have people be moving back in with their parents. Now let's head to the casino.
I just don't understand what is wrong with you two. What is the joy that this stuff possibly brings you?
It's just,
It's fun.
yeah, it's fun.
Now getting into the markets, stocks keep on hitting new highs in boring ways. This is a market snapshot from the Barron's showing the Barron's Future Focus, Barron's 400, NASDAQ, the Dow Jones, and the S&P 500. As you can see, the Dow and both the S&P made new highs last week as the NASDAQ slipped going into the new week. It seems that the markets will no longer fear inflation. Yeah, but the Fed doesn't see inflation. Well, with inflation not at the Fed's target of 2%, the S&P has pushed higher month on month since January of 2021, and even in May when inflation fears were the highest. Now, let's get into market euphoria. Why? Because of the margin debt balance that has increased from a year-over-year standpoint, and it just went down in July, the first time in 15 months. That is insane. So, after peaking in June and coming back down in July, what happens in August? Now, in June, that 882 million number, that was a record high balance for margin debt. So, let's see what happens in the near future. 8:35 p.m. on Sunday, August 15th. We have the futures down right now, and the dollar is up about 0.01%. So, let's get into some charts. Now, S&P, we have the 4-hour, the daily, the monthly, and the weekly time chart. So, as we get into it and we're looking here, we want to pay close attention to what happens from now to tomorrow morning, just because of what's going on in Afghanistan. Now, that could really affect the markets due to some trades that, well, exports and imports that we deal with Afghanistan. That could really affect our market tomorrow morning. So if you're looking to do something, I would strongly suggest that you wait until the market opens and settles and don't worry about pre-market levels. So SPY, if we're looking at it right now, 4-hour time chart. So no, let's say we touch the 445 level, right? If we touch that, I think there's a good chance that we could push back down to low 440 range. Now, that will require a lot of pressure, and like I stated in my videos previously, there's not that much volume. Friday was the lowest volume, I believe, in 2021. I'm not 100% sure if it was throughout 2021 or if it was longer or not. So that's something to keep in your back pocket and think about. So the SPY is down. The Qs, as well, as we just saw. Now, it looks like from what we saw last week that there was a shift going on out of growth and into the industrials, energy, and green stocks because of the infrastructure bill, and they would mostly benefit the most out of any stock right now. So because of that, you might see a dip or a sell-off in the Qs, but then again, like I said, the volume's not high and you have to pay attention to the put to call ratio. And the sentiment right now is bullish, believe it or not. But it's only bullish when it comes to the equities. Everything else, the put to call ratio sentiment is bearish. But in the short term, it is definitely bullish. So looking at the Qs right now for a time frame. Now, if we're looking at the 4 hour, you see we hit this low point of 365 before coming up and regaining this top right here of 368.65, and now we're looking like we're consolidating right here, and the Qs we're not down that much right now, but like I said, you just want to be cautious in this environment because this is a volatile time we're in. So my instance is I'm looking at the industrials and energy stocks. So what I would like to do right now is look at the Dow real quick before. Alright. Same thing here, right? So we got the Dow pushing lower right now, which, like I said, you gotta take everything with a grain of salt. Now, the high is 356, so right now we're looking at that as resistance for tomorrow morning. And support, we have solid support at this 355 level. So we look at the daily chart, we do have support at that 355 level. And then past that, it's the low 350s. And it's the low 350s. And if we break that, we're looking at probably 345 range. But who knows? Is this the top? I don't think so. Could there be a little pullback tomorrow because of what's happening? Possibly. Keep your eyes on crude oil. And now I would like to look at the infrastructure ETF because this is something that you should keep your eyes out with the infrastructure bill. So from a monthly chart, it bottomed March 2020. So when COVID happened, this bottomed at $16.69, and now it topped in May, hitting $37.40. Now it looks like we're coming back up, and this 5-day moving average is looking like it's showing support there at the moment on the monthly chart. And as we get to the weekly, we do have resistance at that 370 level, I would say 37 level, sorry. So from a 4-hour perspective, I mean, we could drop to low 36 if things hit the fan tomorrow or this week with what's going on in Afghanistan. We're not really sure where things are heading with that. So now what I would like to do is get into some stocks that I am looking at, and actually, full disclosure, I hold this one, and this is tied to crypto. This is Bitfarms. They pretty much, they mine Bitcoin and cryptos, and they have taken off.
That's my 2 cents. Thank you.